All right. Hey guys, welcome to the Atlanta Landlord Luncheon. I'm Matt Martin with PMI Georgia. This is Chris Littleton with PMI. I'm so happy to have you guys joining with us today. So our goal at the Atlanta Landlord Luncheon is to bring you monthly education, market updates, and networking events to help buy and hold investors build long-term wealth in real estate. So please follow us on Facebook and LinkedIn at the Atlanta Landlord Luncheon. Welcome to check us out there and engage with these live streams. Also, be sure to follow our speakers who come and speak each month. Check them out on their social media or find out how you can set up a call or a meeting with them too. So I do want to highlight a couple speakers we have coming up in the new year. So in January, we're going to have Randall Henderson with Rentvine. Which is a property management and accounting software that helps landlords keep track of their properties. But he's also going to be sharing about changes he's seen across the nation for property managers. And so that'll be a really interesting speaker in January. And then in February, we're going to have Monica Gilroy, who is an attorney at the Gilroy firm. She specializes in real estate, does a lot with our local NARPM chapter, which is National Association of Residential Property Managers. So she's going to be bringing a legislative update. There's been a lot of laws that have gone into place in 2024 that affect landlords, and so she's going to be sharing updates on those new laws and anything else that's affecting landlords. So it's really insightful. I know there's a lot of ways we can get into trouble managing properties, and she specializes in either getting you out of trouble or keeping you out of trouble. So stay tuned for that one. And of course, today we have Ted Steinkamp speaking with Advanta IRA about using your retirement funds. So I'll do an intro on him in just a second. Why don't I hand it over to Chris for a moment just to share a little bit about PMI.
Hi, everyone. I'm Chris Littleton. I tell you, I've been real estate investing for like 23 years now and gone full time. I quit the airlines and got into this, and it has been a series of up and downs and all kinds of crazy stuff, but I've helped thousands of investors make lots of money in real estate. I truly believe real estate is probably the best opportunity for you to buy and then create wealth over the long term. And with that being said, I've also structured a lot of deals inside of IRAs, either the pre-tax or tax-free. I personally own a property inside an IRA, a Roth IRA, so it has created wealth for me with over the years tax-free. So when I retire, I'll be able to take those distributions, and it's just been a great opportunity. I've more than doubled my money on that in the last 6 years. So it's been a good investment. And I like I said, I've helped lots of my clients structure deals inside our IRAs, whether it be a traditional IRA, tax deferred or tax free. So so if you're interested in, when we get done with this podcast and broadcast, that if you're interested in taking a look at that and getting into some properties, I'd love to give you a hand with that. With that being said, you want to hand it over to Chip?
Yep, I'm going to introduce Chip Cagle at Longhorn Investments. So Chip, I'm going to let you share a little bit about how you can help investors.
Excellent. So first off, I am live over at the Hobnob Tavern near Perimeter Mall. So next month, be sure to come join us live in person if you would like to see this on the big screen. All right. So Longhorn Investments does loans for fix and flips and new construction. So that'd be residential, 1 to 4 units. And on the fix and flip side, we can do 100% of your costs. That's your purchase and rehab. And as long as that's less than 70% of the appraised ARV. We can even go up to 75% if you get pre-approved for a rental refinance. Now that doesn't mean you have to keep it as a rental, but if you did, not only could you use PMI Georgia to manage it for you, but you could you'd be able to get 75% from us. And then the reason we're able to do that is because if you get that pre-approval, we know that we're going to get paid off if you do keep it as a rental. All right. On the new construction side, we can do 90% of your purchase of the lot and your construction costs. If you already own the lot, then we can use what you paid for it towards the 10% down payment of the construction costs. So I'd love to talk to you about all this. I'm going to give you my phone number, so be sure to write it down: 404-216-5599. All right, thanks. See you guys.
There you go. It helps if I unmute. Anyways, thank you, Chip. Welcoming to the stage Ted Steinkamp with Advanta IRA. So Ted is a business development specialist. He helps, as you'll see, he helps investors use their retirement funds to invest in a variety of opportunities. So he's a longtime resident of Atlanta, lives in Brookhaven. And Ted, I'm going to hand it over to you.
All right, Matt, appreciate it greatly. And let's get right on down to it. So I'm going to hit the slides. Let's see. And gentlemen, can you see my slides on your end? All right.
Sorry. Sorry. Yeah, I had to hit the button. So this will make it bigger.
Okay, appreciate it. Great. Well, certainly appreciate the opportunity here. Wanted to talk a little bit today just simply about real estate investing with self-directed IRAs. This is something we do quite a bit of with our clients here at Advanta IRA. And just to give you a quick overview, I think Matt did a great job of introducing me, so I'm not going to bore you with anything. This slide will be at the end of the presentation. And also, too, please hold all your questions until after I'm finished presenting. I think it'll take about 25 minutes. Very likely, a lot of the answers will come forward in the presentation. And for the answers that don't, by all means, I'll answer that question at the end. But my contact information's up there. I'll be showing this at the end. But just real quick, want to go through a couple of disclaimers before I get into the meat of the presentation here. First of all, Advanta IRA, we don't sell any investment products. We don't provide tax, legal, or financial advice. Please consult with the respective professionals and obtain that information. Last thing you want to do is get into an investment without exploring all angles of it. Now, a little bit about Advanta IRA. We've been around over 20 years as a company. We have over $3 billion in IRA assets under administration. And that $3 billion is spread out amongst over 13,000 unique account holders. All cash that's held in the IRAs that's left over from investing activity after you transfer in money, we hold all of that into FDIC insured banks, so it is secured. And one thing we do pride ourselves here at Advanta IRA quite frequently about, and when we compare and contrast to our competition, is the personal level of service. Every account holder has a dedicated account manager, so you don't have to go through the automated attendant. You have that one dedicated point of contact. If it's something that's as important as interrupting your day, so you can call us to ask a question or express a concern about something, we want you to have that direct contact and not be pushing buttons on the touchpad. Now, real easy question here. What is a self-directed IRA? Just very simply, it is an IRA that allows you to take control of your investing. You can potentially build your money up tax-free if it's a Roth IRA or tax-deferred with any of the other forms of IRAs. And this is something that really, believe it or not, has been around a very, very long time. Now, as I mentioned a little bit earlier, when you're doing self-directed IRAs, this allows you to have complete control. And particularly one aspect I personally like about it, it gives you the opportunity to invest in things you know. You're not forced down a predefined investment menu or what that particular investment provider has to sell. You have an awful lot of creativity around this. And it's a great way of diversifying the portfolio, bringing in different assets to help improve the returns of your overall portfolio. And I have here on the slide just a couple of the most common types of investments, certainly real estate, lending, private placements in companies, precious metals, cryptocurrency, etc. But when we get down to the real estate assets, real estate is such a broad thing. It's probably half, if not more than half, of the business we conduct with clients inside IRAs. Single family homes, whether it's a long-term or short-term rental, if you're doing an Airbnb, if you're going to rehab and retail or fix and flip, however you prefer to call that, condos at the beach, mobile home parks, you name it. If it's real estate, you can pretty much do it inside of the self-directed IRAs. And I'm also going to talk a little bit as the presentation unfolds about where Matt and Chris come in with PMI Georgia, the service they provide, and also what Chip does with Longhorn Investments, because that's also a very, very much a cornerstone of how self-directed IRAs can really work to your advantage. Now, if you haven't heard of self-directed IRAs or seen it in this form before, don't be concerned. Only about 4% of IRAs are truly self-directed. And one point I want to make here, the word self-directed or self-direction means different things to different people in this industry. For us here, it is purely introducing alternative assets or physical assets as an investment medium, not the most common things that banks, insurance companies, and brokerage firms provide, like mutual funds, ETFs, annuities, etc. That's what most people are accustomed to seeing and hearing about when it comes to IRAs. And one thing I also want to stress, self-direction is nothing new. There was one law that was passed in the mid-70s that created IRAs. So it doesn't matter where your IRA is held. Everything is under one form of federal law. And that's going to be extremely important to understand. Some aspects apply to self-directed IRAs. Some aspects do not apply to self-directed IRAs. But why would someone want to self-direct? This is a question that we're asked frequently. First of all, I think the biggest, most popular reason is it gives you access to a new pool of capital to deploy for your investment purposes. A lot of people don't want to touch the money that they have in their bank accounts. They're probably saving that cash for a particular purpose. Maybe it's their emergency fund. If you have kids in school and you're stroking tuition checks, parents out there, you can certainly appreciate that. Maybe it's your vacation money. Maybe it's some other purpose. But usually that money is more focused on a short-term purpose, not a longer-term purpose like investing for retirement. A lot of you probably have stock market fatigue. That's what we hear from a lot of our IRA investors. They're tired of it, the ups and downs. It's very commoditized. There's not much differentiation in the product. But over on the self-directed IRA space, creativity is endless. And of course, tax benefits. When you're investing with IRAs, it's always nice to, at the very least, be able to defer any tax that you must pay as a result of the income or capital gains. And in the event of a Roth IRA, hey, if it goes past that 5-year seasoning rule, everything is tax-free upon distribution. Now, basically, what can be self-directed in an IRA? Any account that has the letters IRA after it, whether it's an employer retirement plan or any of the forms of IRAs for individuals, but many of you probably are not aware, healthcare savings accounts can be self-directed, and so can the education savings accounts. By the way, on the business, the business retirement plans, everything today since the Secure Act was passed also has a Roth feature to it, and we record keep all of those as well. Now, when you get into a self-directed IRA, opening an account is one thing. The second step is getting the money into there. This is actually a very simple process, couple of basic rules you need to follow. But anytime you're opening up a self-directed IRA and you're going to move money between IRAs, that's a tax-free event. There's no penalties, no taxes, as long as you're moving from one custodian to the other custodian and not taking possession of the cash. And there's no tax reporting required. So there's no 1099s involved in that. Now, for those of you who may want to use monies that come from a former employer's retirement plan, little different process. It still is a tax-free transaction. The only difference is you need to provide instructions to the former employer's third-party administrator, whether it's an old 401k or even a lump sum distribution from a pension plan. Provide them the instructions. Now, there will be a little bit of tax reporting here, but nothing to be fearful of, because the third-party administrator will issue a 1099-R, and they'll just state, hey, $1,000 was distributed from here, and Advanta IRA is going to issue a Form 5498, which is the respective tax form for IRAs, and we'll say we received the $1,000. As long as those two numbers offset, no taxes are involved. If there's a discrepancy, IRS certainly would be looking to receive some tax revenue from you. And I'll talk a little bit more about that on the next slide, where it really comes into play in particular. But as I said, don't be concerned about taxes. As long as it's going institution to institution, there's nothing to fear. Now, this is where taxes could come into play on a rollover. If you're taking personal possession of the money, we most commonly see this when someone leaves an employer and they either take a check from the old 401k plan, or because their balance is too small, the employer forces them out. Don't fear, because as long as you roll over that money into an IRA, self-directed or otherwise, within 60 days, no taxes. If it goes past 60 days, there's going to be taxes. So clearly you have plenty of time to do this. Just be aware, 60 days is the rule. You can only do one rollover like this every 12 months. IRS passed some new legislation. I shouldn't say it's new. It was done back in 2017 to clean up some abuses with this practice. But one rollover or indirect rollover like this can be done once every 12 months. As long as it's done within 60 days, no taxes, no penalties. Now, there's a couple of rules with self-directed IRAs. And I want to talk about the flexibility here, what's prohibited as an investment. There's really only two things you cannot invest in inside of a self-directed IRA. They are life insurance contracts and collectibles. So what we mean by a life insurance contract, pretty self-explanatory. You have an insurable interest against someone, they die, you receive the money. Can't have those inside of an IRA. Collectibles, no Barbie dolls, no baseball cards, no fine wine, no art, nothing like that. That stuff is just too difficult to value. IRS will not allow that inside of a self-directed IRA, but pretty much anything else you can do. One note I want to make here, coins. Precious metals are a big thing in self-directed IRA. We have quite a few clients that do it to some extent. Coins, if they are from a mint, and the IRS has a list of non-US mints that they will accept as an investment, those coins are eligible. But if the coins are an antique coin or something from back in antiquities that has your favorite Roman emperor or Greek mythological character stamped on a blob of molten metal, that's considered a collectible. Can't have it inside of the IRA. And then there's also prohibited transactions. And I'm going to go in a little more detail on the next slide about this. But basically, prohibited transactions are when you conduct a transaction between yourself and a disqualified person, or if you're conducting a transaction where you're going to receive some sort of direct benefit as a result of the transaction. That is disqualified, and that's where we get involved as a custodian. Whenever a client of ours has a question about entering into a new transaction, will this be disqualified or not, they can always approach us, always give us a call. That's what we're here for. And then also, on occasion, there may be taxes that are due on these transactions, mainly in the form of unrelated business income tax. And this results to the business income that is earned on that particular investment. But one thing I will tell you about taxes, you only pay them when you make money, and don't fear them. Just factor them into the equation. Doesn't mean it's going to cannibalize your returns. Actually, even after paying taxes, you can probably have an extremely healthy return on your investments. It's just something you need to take into consideration. And that's why we always ask you, go get the proper advice from the proper professional before you make the investment. You don't want any unseen surprises. Now, I was talking a little bit about disqualified persons on the previous slide. Basically, what a disqualified person is anyone in your direct lineage or bloodline, either up as an ascendant or down as a descendant, and of course, your spouse. You cannot conduct business activity between these people. They're disqualified persons, and if you do, that's a disqualified transaction that may have adverse consequences. However, please note, look at the box below of whom is a non-disqualified individual. Siblings, aunts, uncles, cousins, nieces, nephews, in-laws. You can do business between these people and conduct transactions with these people. The reason why you can't do it along your lineage, IRS is all about collecting taxes. They don't want money to escape the tax system, and mainly in the form of estate taxes or generation skipping taxes. That's why they have those rules into place. That doesn't really apply with the folks in the non-disqualified persons box. Now, I want to take you through a couple of case studies here and kind of develop a couple of scenarios where IRAs get deployed, what we see most common, and where you can really leverage them to your benefit. Now, in this scenario here, I want to talk about purchasing real estate directly inside your IRA without using a loan, just paying cash, just bring you through the basic mechanics of the process. Now, in this particular situation, we're going to have this fictitious individual, Joe. He's going to open his IRA. He'll do it here at Advanta. We're going to walk him through the process, get his account opened within 24 hours. And then Joe finds a property and he says, hey, I want to buy this and use the cash in my IRA. On our end, very simple process. We're going to work with Joe, getting that property under contract. It's going to be in the name of the IRA as the buyer. And the IRA is going to be dispersing the cash, whether it's escrow or the final purchase price. The IRA, or Advanta IRA, I should say, is going to be executing all of the documents on behalf of Joe, the IRA holder. Now, what's Joe's responsibility in all this? Because he is giving us direction about what he wants to do, he needs to review and approve all the documents, but we're going to sign on his behalf. Now, when the closing happens and occurs, Advanta IRA is going to deal with the closing attorney, wire out the monies once we've deemed everything is in good order and Joe has given us the permission to move forward. And then when Joe has this rental property in his portfolio or in his account, Joe's going to have all the discretion in the world to determine who he wants as a tenant and what are the terms. And he also has all the discretion in the world to tell Advanta IRA or perhaps PMI Georgia how he wants the property managed and how he wants the revenue received and the expenses distributed. So Joe is not losing control. He just doesn't own it directly. He has to go through a custodian and to a lesser extent through PMI Georgia in this scenario. Now, here's the cool thing with it. Whether Joe is going to own this direct or he engages PMI Georgia as his property manager, all the income that comes into the IRA, if it's just Joe only doing this, is not taxed. And then he can use that revenue to pay the expenses. He gets to keep what's left over. Now, if PMI Georgia is hired by Joe to be his property manager, PMI Georgia is going to receive the rent, pay the expenses, and whatever's left over, PMI Georgia sends that to Advanta IRA, so that money goes back into Joe's IRA without any taxes. That's a very basic scenario. Now let's take a look at the second case study when you're going to use an LLC inside of an IRA. And having a little conversation with Chris Littleton before we went live, Chris uses this methodology. This is where you can have checkbook control of the funds inside of your IRA. Probably about a third of the IRAs here at Advanta utilize checkbook control. What that basically is, just think of the slides we went through a little bit earlier. What establishes checkbook control inside of the IRA is an LLC needs to be established, not in the name of the IRA, but in the name of a business, a legitimate business name. But it's going to be a single member LLC, and that single member is going to be your IRA. That's going to be who owns it. Now, the operating agreement needs to have Joe appointed as the manager so he can make decisions, but technically he's not the owner. His IRA is the owner. We're going to work with Joe to get the money from his IRA over into the LLC. Now, what gives it the checkbook control is when Joe goes to a bank of his choosing, opens up a bank account in the name of the LLC. And hypothetically, let's say the LLC is named Buster's Enterprises LLC. That's a business entity. It can have a bank account. The bank opens up the account. Advanta IRA moves the money over. Now Joe is the one who can stroke the checks. He can buy properties, receive rent revenue, and pay the expenses. Also, if PMI is engaged in here, PMI would still perform the same responsibilities as a property manager. They would receive the rents and they would disperse the expense dollars and just send whatever's left over into the LLC checking account. Now, one of the items on here too, hypothetically, could be a loan that was used to purchase the property. Well, one of the expenses, whether it's PMI or Joe stroking the check, would go to Longhorn Investments to pay the loan. So the difference really between the two, if Advanta IRA is going to be the record keeper on the IRA, we're keeping all the records, receiving all the funds, doing all the disbursements. If you're going to have checkbook control, you're going to be in the record keeping business, not Advanta IRA. So you're going to have more responsibilities on your shoulders doing it this way. However, we don't go away as a custodian. If you have any questions about is something permissible or not inside of an IRA with checkbook control, pick up the phone, give us a call, or send us an email. That's what we're here for. That's what you pay us for. Now, let's talk a little bit more, going in a little more granular detail. This is something we refer to as partnering on real estate. This might be something some of you out there do want to consider because face it, to have a chunk of money go out of your IRA to buy a rental property, it can be some huge dollars. You may not have enough to do the transaction, but you want to find a business partner to do it. This is something that is very powerful when it's used in the correct way. Now, first of all, we got this fictitious scenario. We have Linda and Paul. They're spouses. And if you remember to my previous slide about direct lineage and you can't do business with your spouses, this is an exception. In this situation, you can, because both spouses are investing in an unrelated asset, which is a rental property in this situation. So what we're laying out is both Paul and Linda, that we just fictitiously said they both have $100,000 in their IRA. They find a property for $150,000 that they wish to purchase, rehab, and get it ready to rent. So they rent, they receive $1,500 a month. Well, how does all this work when you have two individuals in here? Well, first of all, they both have to have their IRAs. They both need to make an offer on the purchase and have their respective custodians involved in the deal. Now, what is Advanta IRA going to do as custodian in here? We're going to handle it the same way as the first case study we looked at. The only difference is there's two individuals with their own respective IRAs involved in this. So we're still going to collect all the rents. We're still going to disperse the payments for expenses, and what's left over will be split according to the original percentages of when they went into the investment together. And this is something very important because the percentages that get established going into this sort of deal must be maintained throughout the entire life of the investment for however long you hold it. So if Paul came in at, say, 60% and Linda was 40%, just to use different numbers here, Paul would receive 60% of the revenue from the rent. Linda would receive 40%. And on expenses, that same split must be paid that way. So Paul's going to be paying 60% of the expenses. Linda pays 40%. By the way, if you're an individual and you want to, what we do refer to as commingle your money, meaning you're going to use your IRA money and you want to use money out of your bank account to buy an investment like a rental property in this scenario, same thing works. Those original percentages, just adhere to them through the life of the investment. There's no problem with the IRS. So you still have to receive the monies in those same percentages as the way you went into the deal for the life of the investment. But that is a very creative way. We see a lot of people execute transactions. They'll put some of the IRA money in there and they'll keep some of it with just bank account money. And there's other reasons to do it that way. Mainly, there's some reasons for estate planning. There's other reasons for tax planning, and then also legal liability issues. But that is something you must discuss with your respective advisors on those things. But keep in mind, you can still do this type of transaction, whether you're partnering with a family member or you're just going to use different sources of your money to invest. And also, too, by the way, PMI can be plugged in at every step of the way here as a property manager. Nothing upsets. They're going to be an expense on the transaction, but they're going to be a very necessary expense. If you really value your time and you don't want to deal with the tenants, the termites, the toilets, hire PMI, let them manage the finances and just upstream what you need. Chip on his end provides a very valuable service because what if you don't have all the money you need to purchase a property? Well, Chip is there. You already heard he can lend up to 100% in some circumstances, and others it's a little bit less. So you can still contribute what you have with your IRA or a lesser amount that's in the account, obtain the property, obtain the investment, and get on your way with your real estate investing. Couple of things here. One thing that's very important, Chip is extremely aware of this on the lending side. Whenever you borrow money using your self-directed IRA, you must use a non-recourse loan. That is IRS rules. They are non-negotiable. Non-recourse lending only. So please make certain, just let Chip know you're going to be using an IRA. If you don't let him know, he's still going to ask the question. Couple of takeaways here just before we wrap this up. Keep in mind, you can use for self-directed IRA, you can use any account that has the letters IRA after it or a former employer's retirement plan. It just cannot be a current employer's retirement plan. That is extremely rare. Those can be used. I won't say you can't do it, but you probably have a less than 3% chance that you can. You get to choose the investments, get to invest in things that you know, and you can control it. And keep in mind, all the expenses are paid by the IRA, and you can engage PMI Georgia to be your property manager, give yourself the gift of time, and you can still be a real estate investor without the headaches associated with it. If you want to learn more about what we do as a company at Advanta IRA, our learning center is on our website. The website address is advantaira.com. If you get on the events tab, you can see all sorts of events that we have for webinars. We do those Tuesdays and Thursdays each week from 12 noon to 1 p.m. We also do podcasts infrequently, approximately one a week, and there is a blog on there. So feel free. The website is there for public access. It's for your use. We keep it all educational and informational. If you do want to move forward and open up a self-directed IRA with Advanta, just go to our website, get on into the account opening portal. It takes 15 minutes to do the questionnaire. We'll send you the documents ready for digital signature via DocuSign, and we'll walk you through all the steps of the process to get your account funded so you can go out and make the investment that you seek. And really, with that said, I'm going to open it up to questions. So please put your questions into the comment field. And Matt, Chip, if you have anyone live in your offices or location that has a question,
Ted, thank you. Thanks so much for walking us through that. I do have a question. In purchasing investment real estate, a lot of times time is of the essence, and you're trying to offer a fast close. Is it required to get an appraisal? Are there inspections that are needed to be able to use IRA funds on a purchase like that?
If you're doing a cash purchase, no.
Okay.
You can just spring on it. Now, if it's time sensitive, like you said, hey, I'll put you under contract today. We'll be at the closing table next week. Keep in mind, there's a few things you probably want to do legally. Talk with the closing attorney about that, like title searches, etc. But if you utilize the checkbook control IRA, you take a step out of the process, which is communicating with Advanta IRA to arrange funding to go to the closing company. So you can just broker a check or send a wire from that bank account.
Okay. So if you have an LLC in the IRA, then the
shortens the time.
That shortens the time of transfer. But what if you don't? What would be the time it would take to transfer funds?
Yeah, we can send the wire transfer out same day, depending when we receive the instructions.
Okay.
I would always ask, do as much of the upfront work. We'll coordinate with the title attorney, so we're going to know we can send the wire out the day of the closing.
Okay. So a 10 to 14 day close, that would be pretty doable for.
Very doable.
Yeah.
Because we're always going to be in contact with the closing attorney. That's one piece of information we require on those transactions.
Okay, awesome. Anybody, you got a question?
Well,
Chris?
I mean, most of my clients that were using their self-directed IRAs, they do the checkbook control. They create the LLC. They fund the LLC. That lets them be a little bit more nimble, and with the funds and the transactions, so that that's kind of a heads up scenario if you're wanting to do those quick purchases. But I tell you, Advanta, we have worked with a multitude of self-directed companies, and Advanta is by far is the easiest to work with. The fees are probably one of the most reasonable, and they will help keep you in compliance. So I'm very pleased with them, and my clients that have properties in their IRAs are very pleased with them as well. But and I have clients that have done both. They have their self-directed IRA actually own the property, and then I've had ones that do the checkbook control. So it's a little bit different, but having someone that has that's an agent, your real estate agent, or working through that deal your first time, if you have questions, having someone like myself that's done these kind of transactions, or even people at Advanta that are going to be there to respond to your needs is very helpful. Yeah. But I find that the nimblest way to get out there and do those quick closings, if that's what you're looking to do, is probably the checkbook control, having it set up in advance.
And Ted, do you have to file taxes on the LLC?
No, it's inside the IRA, so it's protected in that regard. Where there may be taxes involved, I had on one of the slides the unrelated business income tax on the business income. That is something you're going to need to check with your tax advisor prior to going into the investment. Will it apply or not? If it does, those taxes can be paid out of the IRA because the income's going to the IRA.
Okay, awesome.
Yeah, I mean, there's some unrelated business income that may be taxable if you're taking out a loan, So so then if you're if you're buying a property and you're using some funding for that other than cash that's owned by the IRA, you'll have to segregate that income, and you'll have some unrelated business income tax
Okay.
that you'll have to file on. But there's just I mean, you file every year basically on your schedules about what you have in your IRA as well. But it's tax deferred, like the tax free. It's just a matter of the IRS knowing what you have.
Correct. And that's where the tax advisor really comes into play, because you're going to have expenses related to the property where taxes may not come into play for several years on the investment.
Or you may have already paid the taxes, which is the case in the self-directed IRA, in the Roth. You pay the taxes going in, and it's the earnings are tax free on the back end when you take it out, unless you, like I said, you may have, if you fund a deal if you bring in some funding, you may have to segregate that percentage of funding and the income that provides in your taxes.
Correct. And as I said earlier too, don't allow taxes to be a deterrent to investing. Just take it as part of the equation, the math equation you need to calculate. You can still have extremely strong returns even though you're paying taxes. A lot of people just get it stuck in their head. It's going to cannibalize my returns. No, it doesn't. In a lot of instances, it's going to be a very, very small amount. The other thing too, Chris, you made a good point about being able to be nimble and move fast when you have to close on transactions. Well, how about when you get them under contract? Make that contract binding. You need the earnest money in.
Right.
You can always go to the bank, get a cashier's check, send a wire transfer same day, or within just a few hours if you have checkbook control. That is very important, particularly with the real estate market we had 2-3 years ago. You better be signing the contract, or at least have Advanta sign the contract and get that cash in ASAP.
Yeah, a lot of times we were taking, we would have earnest money on file with some of our clients in our escrow accounts. We have a registered escrow account, so that makes it easy to send out the contracts, and we have our clients signing for the properties, and approving the properties because they're in the self-directed. I mean, they're in the checkbook control, but we also were sending contracts over for approval and then to Advanta for the funding, and it's all in the process. So It was like it was streamlined through our Advanta sign. So it goes to the owner of the IRA for approval, then to Advanta for signature and funding. So we streamlined the process as best we could here, and it works well.
Good to hear, because we try to take as much of the headache and the time out of processes. I mean, we're all about ease of doing business. Anywhere we can save you time and money along the way, we do it. Some things, face it, the legal system gets in the way. We have to comply with it like everyone else.
Right. Well, I'd love to hear from Chip. I know Chip has done a number of deals like this. Chip, what are some common questions or ways that you can help with an investor who wants to do some of their IRA funds in purchasing a property?
Yeah, so when with that checkbook control, that's going to make it a whole lot easier than the typical way. You would just need to bring all your funds to closing with that checkbook and write a check for whatever the closing costs are. Even though I say we do 100%, you still have points, fees, closing costs, interest, things like that you have to bring to closing. You have to make a monthly interest payment. So that's where your checkbook control is going to come in.
Also, too, where the checkbook control really shines, some A lot of closing attorneys will not accept a handwritten check. They either want cashier check or wire transfer. Once you get the final dollar amount, you can go to the bank and arrange that in no time.
Right.
It takes about 20 minutes, and you go to the closing attorney's office at the anointed time and begin the process.
Awesome.
A lot of theatrics taken out of the process doing it that way.
Yeah, most of them nowadays require the wiring funds to wire the funds.
Yeah, yeah.
Yep.
Usually it's like anything over 5,000 they want to wire.
Yep, anything under, they're more than happy to accept a cashier's check, or some of them, I guess, will accept certified funds still, but no stroking a check out of the checkbook.
Yeah.
Right.
Well, that's awesome. Well, Ted, thank you so much for speaking with us today, for sharing about
You're welcome.
how clients can use their IRA funds to invest in real estate. What's the best way for them to get connected with you if they want to talk more about rolling account over or getting started?
Yeah, easiest way is you can reach out to me through email, which is tsteinkamp@advantaira.com. I had that on the one of the opening slides, or you can just give me a call direct here at the office. My phone number is 470-866-6185.
And I will add, that contact info in the show notes for people that are watching this as a replay. Chip, what's the best way for people to get in touch with you?
My phone number is 404-216-5599. You can email me at ckagel@longhorninvestments.com.
All right. And just to conclude things here, thank you again for joining us for the Atlanta Landlord Luncheon. Super excited to have you be a part and join in this. Please stay tuned for future topics where we'll be helping educate investors and as they buy and hold real estate. If you ever have any property management needs, we'd love to connect with you. You're welcome to go to our website, pmigeorgia.com. We have a rental analysis form on there. We have a rent or sell calculator. We got a lot of great information on our website. And if you'd like to take it a step further, I'd love to schedule a call with you so I could find out more about your goals and how we could help you with your investment properties. Once again, my name is Matt Martin. This is Chris Littleton. And thanks again for joining.
Thanks, guys.
Thank you for the opportunity.
See you January 20th. Come live to Hobnob.
That's right. That's right. We will be
Okay.
meeting on January 20th. So I think that's
All right.
MLK Day.
All right, thanks everyone. Have a great
Merry
holidays.
Christmas.
Yes.